Hello, welcome back to WINFX Trading YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna teach you price action 3 points dynamics theory. This theory is very important, and there is not much document about this, but I'm going to the practical charts to explain what it is. Okay, a lot of people have been actually losing money because of ignorance of this. So let's see how it goes. Now, the idea is to predict the origin of a signal and the destination of that signal. The only signal that gives profit is the one that have a destination with at least 50% of previous origination destination distance. At least 50% of the previous origination destination distance. Okay, so for this to be valid, we shall be using a higher time frame like H4. Okay, now you have to map out a previous origin and destination. The destination signals the direction of the market, while the origin signals like the origin and the direction and the destination signals the direction of the market. So the aim here is to believe that there exists a point on a chart, on a trading chart, that exists a point or group of points, a kind of loop, that if such points or loops are broken, price will never come back to that point so long the difference between that point and any other point is measurable. Price will never come back to that point so long there is a separation, a measurable separation between that point and the next point in real time as price flow. Okay, so the aim is to use origin destination belief that price will originate somewhere and destinate somewhere at least 50% of previous origination and destination movement. Now look at an example. We have price movement. You see the distance, the previous origination and destination should be a very big distance that break a structure. So we have a break of structure here. Okay, and so we have this movement that originated from here and ended here, because it was when it reached here that it retraces. Okay, so we are talking about, if you go back to the notes, we are talking about 3 points dynamics theory. So the 3 points here is that we need first 2 points, the origin and destination, and then the third point I will represent it with a horizontal line. The third point is what we are targeting, is what the third point should be our entry. Okay, but the direction we are going to take, whether buy or sell, depends on the orientation of the origin and destination. If the destination is acting downwards, then you are selling. If the destination is acting upwards, then you are buying. Okay, so the main thing is to find out origin destination part that is breaking a structure. Okay, origin destination part that is breaking a structure, or you should at least have some knowledge about other higher time frame of the market apart from H4. You should have good knowledge of the higher time frame behavior of the asset, like the daily, the weekly, and the monthly. Then when you have this idea, you can easily continue the origination destination path indefinitely or infinitely. Like you continue it until the market give you everything you want. Okay, now this theory is very, very powerful because it's going to eliminate the fear of holding a trade. It will eliminate that fear so that you can hold trade long and make more profit. So what you need to do is to define origination and destination. Like there are minor origination and there are minor origination destination paths, and there are major origination destination paths. There are minor ones and major ones. Now what you need is to get the major one. Okay, you have to get the major origination and destination paths, and then wait for a retracement to create and saturate. And then when a new origination destination path is created, your aim is to find the average point or the third point, which is the middle point, where you can enter this where you can continue that path without price reacting back to that point, without price coming back to that entry point. Okay, so one of the safest place to actually enter, like to locate the middle point in origination destination path, is near a strong resistance or support. Because while you are in H4, if you are just trying to enter at ordinary levels that are not support or resistance, price will always move back to support and resistance, and in so doing your stop loss will be hit. Okay, so the geometry that lead to the formation of support and resistance also matters. So there could be different configuration of resistance and support, which can present big problem, because sometimes price can move like a line, and sometimes it can move in form of blocks and bigger shapes like rectangles or other kind of shape like triangles. Okay, so look at this origination destination path. We know that this is origination, price originates here and is going to destinate, or is going to end up indefinitely. So it is assumed in this theory, we assume that the destination is indefinite, because we want to hold this trade long until the destination is reached, which is assumed to be indefinite. Okay, so look at here. What is happening here? We have a strong resistance here. Price come here and have some rejection. Price come again and create a bearish candle. Price come again and form a dodgy cross, and then this candle started printing. When you see that price is coming near this endpoint, this is a resistance level, and let me call it extreme level. This resistance, when price is coming to this extreme level, even though it didn't touch it but it's coming closer, then you can enter for sale. Now based on this theory, you are not going to say, like, you will find it hard to predict the take profit, so the take profit will be indefinite. So you are going to be holding this trade for a long period of time until you are satisfied with the profit you make. If the profit started going to started halving or reducing after it has went to a big value, you know that it is an ordinary retracement. It's just a retracement, so you are holding that trade indefinitely. Okay, so an example here will be, we have an origin. You see, these are the minor ones we get, so you can actually trade the minor ones if they like the minor origin destination part, if you can locate a valid support and resistance, so that you will not be triggered by stop loss hunt and liquidity sweep. So here what we need is define whether minor or major once these are along the impulsive part of the market, because what I am trading actually is the impulse. Okay, so what you need to do is to mark the origination. Then when you mark the origination, try to locate a resistance level, resistance or support, but trade those resistance and support in the direction of the trend, in the direction of that path. So we know that our path is downward, right? So we are not going to be looking for support, we're only looking for resistance. So here, this is a resistance zone, because price come there and go down, come there and go down. So when we see this price, this one that's created here, it open here. So since this is a strong resistance, we can enter for sell here. We can enter for sell here because it's a resistance. In a downtrend, in a negative part or downward part, you look for sell. So we are going to sell. Okay. Now the problem is, where are you going to put your stop loss? The only way you can be safe in putting your stop loss is to put it about the origin. So this is the origin. So you put it about the origin, and then you are going to hold that trade for a long period of time. Okay? Why? Because the destination is assumed to be indefinite. And that is how market play. Market will move if it want to move to a particular destination, it will move over a long distance, generating huge amount of pips. Okay, now let me get an example where we can see upward path, upward origination destination path. So let's try this volatility 50 index. Okay, so we will be on the ℎ4. Okay, so first of all, you locate previous origination destination path and define the direction. Once you're able to define the direction, not only defining the direction, also try to go to other time frame to know the main direction of that market. A path can have a can be in a given direction, yet the market is at the long term view, the long term situation in the market is in opposite. So you have to get the two. So always trade origination destination path that matches with the highest time frame of analysis, like monthly or weekly. Okay, so let me start. If I go to the month for V50, I know that this area has been a very strong support in the past. Okay, very, very strong. So because there is a fake breakout here, this fake breakout or bearish fake breakout is a bearish fake breakout, meaning that sellers actually break this level, but they don't have enough energy to hold the sales and to keep the market to sell. So buyers overtook them and push price past this strong resistance. You can see that let's delete this. You can see that the monthly candle close above this strong resistance. That is a sign that buyers are strong. But you shouldn't be waiting for this month to open and close. At least when it opened somewhere here and started trading above the close of this one, then you should know that the direction is up. Right now, you go to the ℎ4 and run the origination destination analysis. Okay, now you see, let's start with a concluded origination destination, whether minor or major. but make sure it's in the make sure you're analyzing in the direction of the higher time frame, which is up. So we have this origination here. Let's go back to H4. There is origination. We have this origination. Okay, we have this. It should be in the direction of the band trade, so we'll be looking up for upwards. So we have this origination and this destination. So with this, it is going up. Okay, and now what will make us to believe that this is a valid origination destination based on this topic? You will see that the length of the origination destination path is bigger than immediate or retracement within that vicinity. You can see this length is bigger than this small retracement and this small retracement. So the retracement bounded by the origin destination path are smaller than that path itself, meaning that the path should be bigger, should be longer than the retracement, about them, like the retracement within their vicinity, like within their proximity. Okay, so when this thing happens, you know that it's a valid path. When it is a valid path, all you need to do is to wait for a new path to start creating in the direction of the previous path, and every path must be in the direction of the higher time frame view of the market, and basically in the direction of it should be an impulse. That's what I mean. A path should be an impulsive path. It should be breaking level in the direction which the higher time frame predicts. So right now we now say, okay, this is a path. Right now we are now looking for support, because a path that will give us a buy signal should be valid. Those buy signals should be valid near the support. Okay, so here we just locate a valid support. Okay, we need a valid support. You can see this here. Price came here and reject up. Price came here and reject up. So at least that those support zone of resistance, price have to come to it at least once. So you see that price come here and reject, and then price drop again. You see it drop here. So this is where we should have entered. Okay, immediately it drop inside this zone. So when you are drawing a zone, you actually look for a wick where the area of interest at the area of interest, you look for a wick and use it as the thickness or the width of that zone. Okay, so that's what I do. Then you stretch it. So if you enter here, your stop loss will be about a swing near that zone, which is this is a support. So this swing, there is a swing here, you can put a stop here. Remember, you are holding this trade indefinitely. You see, WINFX trading exists not to teach you what other people are teaching you. We are teaching you metaphysical things that you will trade and you make money, but you will be surprised how you are making the money that other people are losing, but you are making it. I get it. So that's why we existed. So once you put your stop loss here, you see you'll be riding this market. You see that you should have, I shouldn't say you should have gotten this or gotten that. No, we are like this is a kind of indefinite belief that this market is going to go to like indefinite destination. Like the destination will exist, but it will exist at a very far distance, infinite distance. Because of that, you are going to make as much money as you can. So if you want to close the trade when you are satisfied, then you can close it, like if you feel like you want to close the trade. But the aim is to hold that trade as long as possible. Okay, so with this idea, you can define a period of time that the trade will run. You can say, okay, let this trade run for 3 months. Okay, let the trade run for or 2 months, 2 to 3 months, and then you take your profit. Okay, but when you apply exponential method, then you can get this type of signal up to 3 period or 3 trading session. Then you can use exponential method to actually trade. When you are doing this, we are looking at the risk reward. Like here, we have a risk when you place your SF somewhere here, and then you are targeting. Let's assume you want to take your profit here. So your risk reward here is 54/7, which is around 1:7. Now, if you maintain the risk reward of 1:7, then your return on investment is ×8. Okay. Now go and do the math. If you do, if you get this type of signal and do rollover 3 times with a constant return on investment of 8 times, what is your equity growth factor, given that your initial equity is $S? If S is greater than 10, at least S should be greater than 10, then I'm not going to do the calculation. Okay, but in my VIP, we do send this kind of signal, and in the signal label, like a kind of annotations or more further explanation on the signal, you will see where it is written that this signal is going to last for so period of time. So the take profit is a function of time, not a function of price. Are you getting me? So that's why you need to enroll for our courses to learn more about how to trade at metaphysical level, or you join our VIP so that you stop losing money. Okay, you can see this is pretty much powerful. I'm going to prove to you why this idea is very powerful with respect to what happened on several synthetic indices that went from big price to near zero price, or from zero price to near infinity price. I'm going to show you. So let's do something reasonable. Most time people don't know the power of having WINFX trading. Okay, I'm going to show you something. We are no longer going to be on the H4, because when a part is a kind of arranging, when there are many parts that are not advancing, with high tangent force, like that, what you call tangent force, let me call it momentum, but I don't want to go deep into tangent of a thing. Now you need to upgrade to higher time frame to see the truth in that market. Just go to any time frame that can help. Okay, so here I'm in the weekly. Let's manage daily. So let's manage daily. So this is the daily time frame. Okay, now we have a break of structure here, and a retest was made. Any movement that break a structure is origination destination path, ODP, origination destination path. Okay, so this path has been defined, and it is origination destination path. Now what you are waiting for is for another origination destination that we create, right? Now for a valid origination destination to create, a retracement must occur, and that retracement must saturate. And how you know that a retracement has saturated is the swinging system. When there is change in the swinging system as the retracement continue. Are you getting me? So there is a change. At least this candle close below this one, so that is a sign of change in the direction of the retracement, meaning that the retracement have died, and then this is considered to be the commencement of origination destination path, with the origin located somewhere here, and then your entry will now be in between the infinite destination and definite origination. So the origination is known, but the destination is unknown, but we believe that it's going to happen. Are you getting me? So that is it. So here, for we to enter this market, we are now looking for, we are selling, right? Because the direction of the path is downwards. So we are looking for a strong resistance in the daily time frame. Okay, we are looking for a strong resistance. If you cannot get the strong resistance in the daily time frame, then you can try it in the H4 time frame. You can go further to a lower time frame to look for that. Okay, so here we notice that something happened here. There is a very strong level here. You know, people take this thing for granted. They don't even care about those levels. So price came here, keep rejecting. So as a wise trader, you'll be monitoring. Immediately price came here, you enter for sale. Stop loss above here, above a swing outside that support or resistance you are trading. So the swing is here. It's like it's gonna cost money, because you are going to be trading big equity and holding long term. So you are risking 675 pips. Okay, but you are going to, if you go to further higher time frame like weekly, you notice that based on where we enter this market, you notice that you are going to, you should have hold this trade up to close to 9,000 pips. If you approximate this is 9,000. Okay, so if you check the risk reward, it might be a little bit smaller compared to a day trader risk reward and all of that. But the truth is, if you know where the market is going and you use big equity, you will not know the difference. But anyway, let me calculate the risk reward and see. So this, we have A600, let's assume A600 as the reward, divided by 6, let's take it as 700. Okay, if you approximate. So this is 1:12. Now this 1:12 point something, even though you can get it as a day trader, but as a day trader or scalper, you see that some of the profits you make will be lost because of you cannot be correct all the time. But a long-term trader or a positional trader or indefinite trader that you hold your trade to remain like you don't have a TP, but you believe that one day you are going to close that trade in an infinite profit, right? Like a profit that is so big, that is so much. So if you're a big investor and you have let's use small amount of money, something like $100,000, and then you do this. So your $100,000 have materialized to $1.2 million. You know, it might sound crazy, because you can see that some people we boast on the social media and say they take small amount of money to so amount of money. Now the truth is that you are not there. How sure are you that they were able to do that? So what you should be looking on, whoever you are following on social media, is the truth. So it's better you get a short signal and risk big on it. Okay, you risk big on it. Okay, you see, trading is risky, but even if you are afraid to take such risk, and then you put something like $500. Okay, now it's still something reasonable. It's still something, so it doesn't prevent you from doing day trading or scalping. You can still be scalping, but at least you did this. At least if worse come to worse, this one will give you something in near future. It's an investment. This is called investment trading, long-term investment. Okay, so you can see that this idea is working. Origination destination theory is working. So all you need to do is to rehabilitate yourself first. You see, watching video is not the only way to succeed in trading. Because why I say this is, if you really want to apply this in real life, there are experiences you needed for you to see the truth, like for you to confirm a valid origination destination path. You really need to confirm the valid origination destination path. Okay, right now we have this movement that break this level. Okay, it break here, so there is a break of structure. But the funny thing is, there was a retracement happen here. Why is it that this retracement could not reach here? Why now? Price have mind and have got to trade above this strong resistance. Why is it so? In other words, it shows that the buyers are very strong in this market, and there is high chances that this loop is going to be a base, and then we will now have a rally based rally, where this will be the first rally and this will be the next rally. Okay, that's why I say, if I'm doing video, there are things I don't say. You have to be in my VIP to trade the real signal, or you enroll for my courses. Now, if I might give an expo, I will say, here, this is the new part have started in the week. A new part have started in the week. Now I'll go to daily, and I'm looking for a strong support, because we are buying and looking, because the previous origination destination part was a buy part, is upward part, right? So here I'll be looking for a strong resistance where price came and reject. So one of the places where price came and reject. So you see, this is matter of time. So you should enter as early as possible, or you should locate the most early resistance and support, so that when market is trying to do some kind of counter signal, it's not going to affect you. So we have this area very strong. Price came there and keep rejecting. So you should have position here and buy, and then you are going to hold this trade for long. Okay, you see, you can divide, you can open many positions, so that you can close some along the line and try your SL to entry to hold the rest. Okay, in that case you lose nothing, because you're gonna break even. Okay, if once come to us, you're gonna break even. So thank you, and keep subscribing to WINFXTRADING. Bye for now.